Today, let's go over a few observations from the last crisis that we had. It was a geopolitical crisis. And anybody who's been in the market for the last, 10, 20, 30, 40, 50 years, we know one thing. When there's a geopolitical crisis, the first thing that happens is that the dollar goes up, because everyone runs to it, and our bond prices go up and our yields go down. Well, here's the dollar index, and as you can see, it did not go up. Many people, many Fed watchers, dollar watchers are commenting that, this is an anomaly, and it is. It normally goes up during crises. It did not go up. Now, the 10-year Treasury yield did go down. It's, I think, 426 today. I'm not sure what the factor is. It really was flat during the crisis, but since the crisis, last couple of days, it seems like the Fed is coming around to cuts in July, especially with Bowman speaking up. I think that, in my opinion, we've been watching her for the last 2 years because she, I think, is the most realistic person that we have, okay? And she says that she could, at this time, consider cutting in July. Morgan Stanley came out and said they believe there'll be 6 or 7 cuts in 2026. I don't know how they make that assumption, but that's what they just said. So people are actually believing now that they're going to be cuts, and I think it's up to like 80% on the betting page. But again, remember, the betting page is a betting page. It's not the Federal Reserve. Now, another thing that we saw, I don't think it was an anomaly, that when the crisis started, Bitcoin dropped below $99,000. Now it's rallied back up to $107,000. The only reason I'm bringing this up, we know it's not a currency. And so is it a safe haven? And until very recently, we saw no indication of that. And during this crisis, it's apparent that Bitcoin still is not considered a safe haven. As soon as the crisis was over, Bitcoin went right back up. Again, depending on your point of view, I think Bitcoin is a function of liquidity. And if you look here, we're throwing liquidity into the market on the short term. Now, it is not as high as it was in 2007, 8, and 9, but if you look at it, it's almost as high and higher than it's been since the great financial crisis. So the Federal Reserve is throwing money into the system. A lot of liquidity is going into the system. And you got to think about it. Last time we were this high, we were in a great financial crisis. Look where we are today. Another sign of stress is when you look at the spread between the U.S. 10-year and the Japanese 10-year. And if you notice again, it's right back up there. It hasn't been there since 2008. So we have 2 data points that say, hey, we're kind of under stress here, and the stress is equivalent to the great financial crisis. That's all we know at this time. Yet, as one of my commentators pointed out, he says, with all the issues going on, all the worries we have, is the market's at an all-time high. And he is absolutely correct, all right? And it's a great question. And I think it still goes back to what is the liquidity in the market? And here's the Fed balance sheet. My personal opinion, I think they've done a pretty decent job given what's going on. They had the Ukrainian-Russian war. They have the Israeli-Iranian war. You have 6 or 7 consecutive rate hikes right away. We had QT, which went from $9 trillion down to $6.8 trillion. And yet, our unemployment rate is still 4.2%, and our stock market's at an all-time high. And our bonds have moved up, but they haven't moved up that. We were around 350. Now we went to 440. Now we're like 425. Again, given all the things that have happened, and given the tariffs that have been put on, given the treaties that we're trying to sign, I think that the Fed has done a decent job. I know they're taking shots from all sides, but it's kind of hard to argue with the results, even though I'm sure people will. Now, here's the Swiss franc. It continues to go up against the dollar. The only reason I'm mentioning this is up over 10%. The euro is up over 10%, and the dollar is down over 10%. Now, in Europe and in the Swiss, they are having deflation because as their currency goes up, it costs them a lot less of their own currency to buy goods that people are shipping to those countries. And so down goes inflation. And we've seen the Europeans cut their rates consecutive times. And as Trump has mentioned, look at the Europeans, they're cutting their rates. I agree 100%. But here's the question. If the two places that we know where their currencies are up 10% are causing deflation and the dollar is down over 10%, why do we believe that's going to cause deflation for us? Wouldn't that be inflationary? To me, every time a currency goes down, people try to stop it from going down. Countries try to stop it going down because of its inflationary effects. So how are we believing that we're going to deflate when all economics say we're going to have some type of inflation? Then when you add in the tariffs on top of the lower dollar, you could see the scenario where prices could go up considerably. Now, if I was the Fed, I too would be very reluctant to cut at this area. The only reason I say that is because I'm worried about the dollar, okay? Because if the dollar, if we cut and we cut the wrong way, and then people lose faith in the Federal Reserve, which they already are. They're talking about it. We're not talking about it. We're looking at Trump attack the Federal Reserve, where everyone else around the world is like, oh my God, they're attacking the head of the Federal Reserve, the one person that we actually trust. And so if they don't trust what we're doing, down will come the dollar. So then what do we do? Are they going to buy our debt at the same level? Remember, we know they can't go away from us, but they can change around. And so that's why I think that you're still seeing like gold and silver, I think platinum I saw, copper, all these things, all these fixed assets, metals, are moving up in price. And that is because the dollar's going down in price. So this is going to be a very interesting time. And when we come up to July, we're almost there, what are they going to do? Everyone's like saying they're going to cut 50 basis points. I just, I have no inside information. I would just say that I am a little afraid of that. So here we are. We still have a lot of liquidity that we put into the markets since 2013. Yes, it's down, but there's still a lot of liquidity. We also know, even though we're quote unquote doing QT, that we have the Treasury buying our bonds, and we also have the Fed buying on the auctions, swearing that it's not QE. We also know that we're throwing liquidity in on the short end, and we know that we're stressed by looking at the differences between our pricing of other currencies and other bonds. So when you add all this up, we're still have high liquidity, just not as high. We're still adding liquidity into the market, but it's a lot. We can't actually see it the way we did in the past. Is this what's driving the market? I don't know. I don't think anyone does. And then finally, what are the effects of the currencies going to have? To me, I said in a video just last week, with the dollar being so oversold with this thing with Iran, Israel, we could see a turnaround and have the dollar rally strongly before it starts on its way down again. Again, doesn't seem like there's been any effect like that whatsoever. It seems the dollar continues to go down. So, anybody who follows me on this channel, they know that I believe we've had 3 inflationary waves. We've had wave 1, we're in the little trough here. We're getting ready for wave 2. And wave 2, to me, looking at what's going on, could be all wrapped around, do they pass the tax cut? Which today they said that all the CFOs in America believe it's going to pass. So we're going to jump the economy again. They're buying bonds in the open market. They're buying on the auction. Get ready. We could go right up. Like and follow.